Rumors of Iran's conflict crashing Bitcoin's mining power are spreading. But what's the real impact? Experts confirm Iran's share of global hash rate is under 1%, so disruptions there barely register on the Bitcoin network. Despite social media panic, actual data shows Bitcoin's hash rate remains stable, with no threat to network security or block times. Prediction markets now give Bitcoin only a 10% chance of reaching $150,000 by year-end, signaling a major shift in crypto sentiment. As Bitcoin's price struggles and mining facilities pivot to AI data centers, the narrative of digital gold is being challenged. This transformation highlights how crypto infrastructure is rapidly evolving toward artificial intelligence, reshaping both investment expectations and industry focus. The crypto market just lost over $1 trillion after President Trump confirmed continued military action against Iran. Bitcoin is trading near $66,200, well below key moving averages, with total market cap stabilizing around $2.26 trillion. Ongoing geopolitical tensions keep risk assets under pressure, and further volatility is likely if conflict escalates. A single photo leak triggered a $4.8 million crypto breach in Seoul. South Korea's National Tax Service accidentally published a wallet's seed phrase, enabling temporary token transfers. This incident highlights the critical risks of exposing private keys and may prompt stricter crypto regulations. SpaceX's upcoming IPO filing will publicly disclose its 285 Bitcoin holdings, now valued at about $545 million, after a sharp $235 million drop in 3 months. This move marks a rare moment where a major traditional company exposes its crypto assets. It highlights the volatility and transparency challenges that come with Bitcoin on the balance sheet. Trump media just made a bold move. $2 billion poured into Bitcoin, now making up 2/3 of its assets. This aggressive crypto strategy follows their plan to become a Bitcoin treasury company, signaling long-term commitment as U.S. regulations shift. The market is watching closely, as Trump media's approach could redefine how major firms handle digital assets. Just hours after a Trump-issued ban, the U.S. military deployed Anthropic's Claude during a major strike on Iran. The AI provided intelligence analysis, target identification, and battlefield simulations, revealing deep integration in defense operations. Despite Pentagon orders, Claude remained central to classified workflows, sparking debate over ethics and control. Heavy Bitcoin shorts are stacking up as the Clarity Act deadline approaches, raising volatility risks. Institutional investors remain bullish, with ETF inflows and negative funding rates fueling speculation. If a short squeeze hits, Bitcoin could break $70,000, but regulatory uncertainty keeps crash risks alive. Over 39% of Bitcoin's circulating supply is now held at a loss, signaling mounting pressure in the market. On-chain data shows forced selling is picking up, especially as price remains trapped between $64,000 and $69,000. Analysts say liquidity clusters at these levels could trigger either a deeper capitulation or a recovery base, depending on how traders react. A sudden $1.8 billion crypto derivative sell-off hit within an hour after U.S.-Iran tensions escalated, shocking the market. Derivatives pressure index plunged from 30% to 18% as traders rushed to de-risk and liquidation surged. This event highlights how global geopolitical risks can trigger rapid, massive moves in leveraged crypto markets. When missiles hit Iran, Bitcoin was the first to feel the shock, dropping to $63,000 as panic swept crypto markets. With traditional assets offline for the weekend, digital coins absorbed $128 billion in losses, and over 152,000 traders were liquidated. This episode highlights how geopolitical events can instantly impact crypto, especially when other markets are closed. 6 crypto wallets made $1.2 million, betting on a U.S. strike against Iran just hours before the attack. The wallets were funded within 24 hours and placed targeted bets, raising concerns about insider information in the crypto market. Regulators may tighten surveillance as crypto prices tumbled and recovered amid the Middle East conflict.